Hey, good morning, my neighbors. Welcome to another episode of BYTTT. Before you take the trade, this is JD again, and we are back. I got a lot of stuff that I want to cover, so we're going to go ahead and get right on over to our chart. All right, so, also, if you haven't, like or subscribe and hit the bell button for your boy, go ahead and take the opportunity to do that right now, because down below I do have a couple of links. 90% off of Elite accounts. If you're a funded trader and you're looking for a new funded trading company to go with, Elite has some of the best deals right now up to the 28th. We also are doing a get funded towards the end of the month. Go ahead and sign up. Class is going to start next week, and we're going to get ourselves rolling and try to make this a successful 2025. All right, let me just send out one more thing. Boom, 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 boom. There's that link. All right, so the first thing I want to kind of break down is the fact that NQ is trying its best. When I say effort, it is putting all the effort in the world to try to break out. So, talking to the people in the community, I was explaining to them, I'm like, hey, we are trying to break out of this area, but we're sitting in front of an order block. That could be a freight train. So if you're trying to really buy high so you can sell higher, I'm telling you this right now, you're looking for trouble, right? So I think right now you're probably going to get some really good day trades, but I will not be surprised in the next couple of days it probably does one of these pullbacks, maybe come inside of this fair value gap right here, bang bang, and this could be the area that we could probably buy some and then try to see if we can go ahead and attack that area. Not potential, bullish. All right, I would love for that to happen, because if it can build a support, kind of create some type of reversal, we could then reset some of these oscillators because they are kind of a little heated, and then we could go ahead and try to break out to this upside and test to 23,000. I do think that is their goal. There is a couple of levels that I do have question marks before they do that, which is probably about 22,500, 22,750, maybe even 22,800 will probably be tough just because of their psychological levels and their reactions. But I think the market really want to get NQ to 23,000 sometime between now and 2026. Yeah, I know. I said now in 2026. There's a possibility I might do it tomorrow. We'll never know. We never know. But the market does what it wants. All right, another thing that I'm looking at is oil. Remember yesterday I told y'all oil is going to do a little bit of a bounce on top of this order block. If we go back to the weekly, this order block is basically where all this dancing is happening. And it's very bullish because we've tested it here. We've tested it here, made higher highs here. And now we're about to go ahead and give it another test right here. And depending on how this week goes, I will not be surprised of seeing oil above $80. So we're going to see what happens there, because they did fill a fair value gap, but they left a tiny smidge. When I mean tiny, I'm talking about tiny, super tiny, extra tiny. This is where we ended. This is the level. You're talking about a 4 cents tiny fair value gap that they did not fill. So I am curious, were they building this up just to liquidate all those new bears and take it up to that level? That should be fun. That should be fun. All right, and the last one we're going to talk about is the dollar, DXY. If we look at the dollar, you can kind of see we had the nice little order block down here. They tried to hold it up. It couldn't hold it. Right now we're under that order block and we're sitting on top of another one. Could this be just a bounce so that with the prevailing higher time frame that took out that trend line, and to be honest, we're almost to the point where we took out this trend line, but we got to break this pivot here before we call that, because they already took out that pivot. Now, what do we do with that? Well, a bearish dollar means that the market starts to rally and go to those highs. Could this be the catalyst that leads to our 23,000 on NQ? Very possible, but we got to go ahead and wait and see, and you got to be patient, and you have to follow your plan. Do not just go ahead and message be like, JD, you said we was going to go to 23,000. I put all my money on QQQ calls. Listen, that's on you. That is not what I'm saying. I'm saying the market looks like it wants to do something. All right, folks, make your plan, follow your plan. All right, so let's go ahead and get really into it. So I've been looking at a couple tickets, but I'm going to go ahead and get into the earnings runs. So a couple things that I noticed, Lockheed Martin, for example, Lockheed Martin, for some reason, was just on this decline. But again, they are a solid company. They return money to shareholders. Did they miss their EPS majorly? Absolutely. But you got to also remember, this is a company that gets a lot of government contracts. So I don't think this thing is going to go to the OTC anytime soon. But we came to an order block. Looks like they tried to fill a fair value gap and a gap down here at this level. It did not get there, and it looks like it's doing a little bit of a reversal, which is right around an order block, right? So this is what I like to call these jambalaya rice order blocks, where you just got a whole lot of greens, you got some reds, you got some all types of different candles with dojis and full candles, and they're trying to find a way to create a sense that it's going to be tough. It's choppy here. There's no real flow through like some of these other candles, which is why we dropped so cleanly down to this level. So I do think, what's that, 419 was the level. I do think we probably hit our apex of a possible V shape, but again, it is on a downside. You got a death cross right here. You have a downtrend that they're going to have to contest with. We have an order block that's right there. Do I think it's going to get past 450? Very possible. But can it reject around 460 and come down and make lower lows so they can fill this gap? That's a possibility as well. Let's see. What else we got? Let me sort this by who made money. For this month, oh, DE. Look at you, dear. They must have really smashed earnings. No, there's just strong companies get strong things. That's what this looks like. This earnings looks very, very in line of everything that they're looking for. Returns money to shareholders. This could be people just doing some sector rotations, getting out of tech because tech is overheated for everything that they did in 2024. And a company like Deere is a good place to park your money. They do pay dividends, $1.62 a share. It's pricey compared to price, but at the end of the day, there is this company is not going to go out of business anytime soon. So just keep that in mind. I did draw a trend line when I was explaining this a couple of days ago, that there's a possibility we could just break right through here, because whatever upward trend we were supposed to have a follow through, and it kind of looked like we was going to do a channel, and you could see this channel looks like it's breaking right on through. So now we got ourselves a new pivot of this uptrend, and that's what it looks like right here. Come on, get there, right? And it's coming from other breakouts for that downside. Oh, let me do a weekly. The weekly probably give you more of a sense. Make it higher highs and higher lows. Make it higher lows, higher highs, higher lows, higher highs, and this is just decades and decades, and they're just a strong company. So I think that's what we're getting right here. We were on the top of an order block. Whatever was previous resistance turns into support, and that's why we're here. 500 is going to be tough. I won't be surprised there's a retracement. Do not just jump inside of Deere. What was this? Thursday was their earnings. It looked like we just took out this high. So they probably sweep in so that way they can go ahead and drop back down. So just be careful. I got bearish divergences pointed everywhere. Right there, that's weakness. And even though we're making higher highs, you don't have a true follow through here. Just oscillated maybe, but it got to show some strength. Maybe get to like 515, 520, and then that should drag this a little bit higher and kind of break the bearish divergence. All right, let's see some losers. All right, Netflix. I wouldn't call it a loser per se, but it did lose money yesterday. Netflix been on a run. I thought they were going to stop at like 1,000, but you could kind of see this thing is doing some epic moves to that upside and trying to continue the whole way. Could this be just a pullback, come back to this order block somewhere around 1,000 to 110 and then push back up? Very possible. Very possible, but keep in mind, at the end of the day, the way this relatively works, you want to make sure that you have everything in tune here and make sure that you have a key support and then take out the sellers. But until that shows that support, I'm looking for this to kind of pull back a little bit more, maybe even come below the 1,000, kind of flirt with it, because we got a nice little previous resistance. We could use that support, maybe like 996 or something like that. This month's loser, let's see, Coinbase. Coinbase did have solid earnings, right? But I do think this is just a Bitcoin reaction. If we go over to BTC to kind of get a little bit of an idea, this is what BTC is doing. It's just sideways consolidation. They haven't really decided what they want to do. I think we're accumulating to try to take another stab at 100,000 because everybody wants to see Bitcoin stay above 100,000. But if this thing does not hold or does not follow suit or do something that's almost spectacular to try to take out the high at 110,000, we're probably going to test some levels, maybe even get back into 85. We've already tested 89 roughly around January, so we could get as low as 85, because if this is not holding and we're continuing to do this diamond type style pattern, we really could test some levels. All right. And yeah, I think that's going to be very interesting for coin. Let me go back to coin and see if that chart kind of it kind of looks almost the same, but it's just more of a downward side. Now they do make money on every time you buy a Bitcoin and exchange your money and everything else, so that's probably why they're propped up like this. But if we get rid of all these trend lines and drawings, you could see it's just mostly consolidation pockets, which looks very similar to Bitcoin. Okay. All right. If you haven't been on one of my floors before, I try to keep things very, 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 very simple. We do two different types of trading styles. The first one is opening range breakout. It's very simple. It's very common. A lot of traders use it. We wait for the market to open around 9:30. We box out the first 15 minutes. And when the first 15 minutes does its thing, we wait for the first 5 minutes to break above or below and play respectively. The other thing we do market dominance. Market dominance is an indicator that I created, and I love it on the 15-minute. Let me go ahead and get back to my NQ. I love it on the 45-minute because what it does, it tries to anticipate what the next candle will be. So like we had a massive push to the upside, tend to have a little bit of retracement. It anticipated that this was going to be a red candle and this was going to be a red candle and this had a push up and this was a red candle, and it tells us that there is red candles that's possible. Some are bigger than others, but it takes other technical analysis. No one indicator makes you money. It's confluence that makes you the money, right? But we look at it, we look for techniques and everything inside of it, but we wait for that signal to let us know when the opportunities present themselves. All right, that said, I would love to kind of go over something with y'all, because talking about techniques and confluence, one of the biggest things that I do a lot, or especially in my mindset class, is break down how to properly paper trade. And this is where you're going to build all your confidence. What is the purpose of paper trade? Well, paper trade requires skills. It requires tests. It requires adaptation to changing markets. It requires it builds the understanding of managing your emotion, mastering your execution mechanics, tracking and analyzing. You don't even know how your trades are actually operating. Is it successful? Is it doing the job that you expected? This is where you can track it, look at the chart of your performance and your execution, and refine it. If somebody goes and throws an interception in the Super Bowl, hint, hint, right? At the end of the day, they hand them a tablet and they tell them, well, this is what you saw and this is what you should have did. And that's what paper trading is for, is to react on how you can fix it up. Because if you can fix all these 6, you're going to build confidence on taking the trade. All right, this is the proper way of paper trading. I think a lot of people just go in and treat it like a casino, and we try to avoid that. All right, so whereas we taking this trade, we are in day 2 of the week. So day 2, we don't take a paper trade. Tuesday we did our paper trade. It was okay, but the volume was weak, so we really didn't do as well. So we're going to go ahead and look for our opening range and take it on a real trade today. All right, something very small, nothing too spectacular as far as leverage. Let's go ahead and do yesterday's opening range review. Let's get rid of all these drawings. Bye bye. All right, let's see. We got ourselves Tuesday 9:30 right around here. So yesterday we had the opening range that was here, right? And what was crazy about it is that it just decided to go into a complete vacation. That's the best way to explain it. Because after we had the breakout, it was tough to try to play it to the downside, right? And I'm going to explain what I mean by that when we get to the 5-minute chart. But you can see that with the 15-minute chart, 1, we had our opening range. We would be bullish above this level. We would be bearish below that level. And right here is our stranger danger. This is where we get our chops and playing inside a range. And you can see what happened in between there. We was just fighting inside of the range, right? And then right here, you could see we had the 200 moving average on the 15-minute just playing with us as well. They kept on testing it and rejecting off of it, but it was not an easy hold. This was not one of those days where you can take a trade and just hold it. You would have to trail tight, or you was going to get chopped up or get a surprise. So let's go to the 5-minute. This is what the 5-minute did. We had a solid close right here, but what ended up happening? Hit my 800 EMA on the 5-minute, and this thing pulled back. Geez, 207 ticks. That is a painful drawdown after that close. That's why you have to follow your plan and execute properly. When it closed below this level, you probably could have enjoyed this run. Yes, of course, there was a little bit of pullback, but again, you want to make sure it closes below, because this was a test that they could have just played all the way in here. Do not get in early, get in on time. All right. So when we got this close, the entry was right here with a little bit of a pullback, like 7 ticks, but then it pushed all the way down 214 ticks before it retraced all the way back here. So you gave back 100 ticks. That was the type of trades that was happening, because it struggled to break this 800 EMA, and you could see very choppy. You got some greens inside bars. That's very hard to trade. You got another inside bar here that shows signal of reversal, but they liquidated them as soon as they hit the lows, made even a lower low. Like it was painful. If you were trying to trade this, it did not give any consistency. The only consistency it gave was slightly, but even those pullbacks was deep. Let me explain that. You got pullback all the way down to about 97, 129 ticks, and then pull back to like 58 ticks. That is tough. That is tough. All right. So when we finally decided to make a run and try to get inside of the range, because what usually happens with open range, you get a nice little break, it gets to a level, it does a retracement, and then it gives a continuation. That's what usually happens. But in this case, they had a break, it came back and retest, it didn't give another breakout, so it should have retested again. No, it did not. Made a lower high, and then they all bowed out, and it created lower low, but that did not hold. So there was a lot of market adjustments, manipulation, whatever you want to call it, hedge fund managers stepping in, whatever. It doesn't matter. What does the chart tell you? Okay, don't get emotional about the banks and everything else, and they get more money than I do, and blah blah. You're gonna overthink this, and you're gonna overkill yourself. That's not the purpose. Is it following my plan? Well, it rejected the opening range. It held the level. It gave me another shot right here, because this one held and it broke, and I could have played a little bit to here. That's still a decent amount of ticks. That's like 40 to 100 ticks depending on when you get out. So don't get wrapped up on it. Just follow your plan. And you can see when we finally tested into this area, it was at 355. Okay, you're probably like, why are you so mad about 355? Well, they waited until the end of the day, because volatility usually kicks in around 350 and 355. They finally let it push up all the way to these levels. This is, to kind of give you a little perspective, 46 points plus another 26. So that's almost what, 80 ticks back to 80 points to the upside. That was a deep pullback. So if anybody was like, oh, I'm gonna just carry some puts and hold it for the week, you're looking at your puts like in disgust by today. Look at that. That's just mean. Very, very mean. All right, so that said, that was our opening range breakout. Let's do a quick review. We got 22 minutes to the market opens. Let's do a quick review of what market dominance did during that same period of time. Right. So I love it at the 45-minute, because the 45-minute, I feel like it's just under 1 hour, which gives you a strong move to the upside. I think I kind of dragged something out the way. Let me fix that. All right, cool. So I do think two things, right? One, it gives you a good amount of time for an hourly trade. Where's my chart acting like that? Hold on. I think I did something to my chart. Okay, that fixed that problem. All right, so it gives you a good time frame. It's wide enough where it's not like a 5-minute chart or anything like that gets a little choppy and gives you some false signals, but it's not so long where you're sitting there waiting for an hour chart. It's just one of my preferences. I love it on this point. So if we come over here to Tuesday around 9:30, what's the first thing that we see? Well, 9 o'clock to 9:45, around 9:45, we close this candle. It says we anticipate a green candle. Again, this was a massive break. We broke 1, 2, 3, 4, 5, 6, 7, 8, almost 9 levels of support on this. You just don't jump in because you see green. That's just being silly. If it didn't give you a signal or a setup that was your setup for you to play to the upside, which it did not, you shouldn't even bother with that. But then we did another massive move to the downside. And what did it say? Hey, guess what? This one could be a green candle, and that's exactly what it did. Found a nice little support, did a reversal. It kind of went a little parabolic compared, but it could have followed with some continuation. But again, it gave a signal that this could be red. So this was profit taking that's happening. Every time it switches these signals where we got, hey, here's a red candle because we had this green candle, which it anticipated. That was because at the end of the day, people were taking profits. It could have been an accumulation breakdown. Absolutely. That's what I think happened here. And when we got to this level, normally, based on historical data, we usually take some profits and don't just go straight down. This thing went vertical. You're talking about 89 points plus 82 points. That's about 166 points to the downside, and that thing went numb. That's it. So I think that's why we consolidated so much here, was because it just went so hard so fast, and they had to unravel all of this. Here's another instance of that coming over to the end of the day. So we had a massive move to the push up. It anticipated a red candle. Yes, that's exactly what it did here, because this was the pullback so that way they could get another push here towards the end of the day. So we had a 45-minute push to the upside, 45-minute hold, no real breakdown, kind of inside bar. So we can get a nice little reversal where we go down, but there was no reversal. We couldn't even break that low right here. And then that's where we get this nice little push up towards the end of the day. All right. So that's how I kind of look at market dominance. It's very simple. It's just to kind of give gauges of where I can get my scalps. I'm mostly a scalper, and try to make my money and then just chalk the deuces. So if I'm anticipating that this is going to be a red candle, the moment it shows any weakness in here, I probably will be down at this level here and just get out of the trade. So let's see if we can find something pre-market. See if we can take a trade here. I don't think I see anything yet. All right. And someone just texted me, do you think market dominance works at other time frame? I do. I just think you go to like lower time frames, you can get yourself kind of screwed up because there's false signals. I think the longer the period, the better the signal when it comes down to indicators. Like, for example, like I got the algos here, right? This one says, hey, buy. All right, cool. That's a buy. But depending on if you actually got in here, you got a lot of bit of chop before it actually took off. And then right here, same thing. So you got to get some confluence. But if you go over to the 4 hour here, and let's say that's the load. See, is it still? Yeah, still loaded. Right? So right now it's saying to sell because of this action here. But if you just jumped into a sell because the indicator said, hey, they said to sell, guess what? You end up screwing yourself. Look at this deep pullback. Yeah, you got to put things into context. But if you were able to catch this buy right here where they broke out here, waited for the pullback, and then you can see that the buy is holding where they use that support, you can be part of this all the way up. Alrighty. Let's get back to that 15 minute. Let's see if we find something fun to play. It looks like we're doing a little bit of a downward trend. I think they are trying to get back to that opening range from yesterday, which was that 9:30 candle. Yeah, I think that's it. Let me put that back. Kind of something like that. And I think they're trying to see, all right, we're back under it again. Can we break this down? And right now we are in multiple deviations of downtrends. Let me stick with this one. With this one. That one's so tight. I'm gonna just use this one. This one and this one. And right now they're trying to figure out, are they going to break this downward trend or not? All right, it's 9:14. Let me go ahead and see if there was any news or any news that's coming up that can throw us off going through today. I like to use my FX book. They're really cool. Love their structure. But some people like Forex Factory, the one that's built in inside the Trading View. Ooh. Yep, we could get tripped up. All right, at 2 o'clock, there is FOMC minutes. That's going to tell us where the economy is and what the Fed is thinking. So be careful going into 2 o'clock. What sucks is one of my favorite time frame where I'm more efficient in is 10 a.m. and 2. So I'm like, wait a minute. I might not be able to take a trade or two. So this is going to be very tricky. And then there's a Fed talking at 5 o'clock. So I would say be careful carrying anything overnight. We did come off of housing permits earlier this morning, which was bullish for the dollar. Probably the reason why we're kind of curling down to this downside right now. And they're retesting the bottom of this box. But I will say this. Be very careful going towards that 2 o'clock. Let's see what tomorrow brings. Tomorrow is jobs report. Jobs are always on Thursdays unless there's a holiday like Thanksgiving. There's a Fed speaking at 9:30 right after the jobs report. We got some oil inventories. Actually, oil's probably going to wait for the oil inventory that's tomorrow before it really powers up. So I'm going to see if I can find a position that I'm comfortable with, but I probably will play it guaranteed on tomorrow. And then we got a bond auction, a treasury bond at 1 p.m. So that usually throws the market all over the place with a Fed balance sheet at the end of the day. So we got two spicy days that can really be a catalyst to see if NQ can reject that order block. So be careful with that. Let me see, is there anything on Friday? I don't think so. Normally not. Michigan sentiment. Yeah, Michigan sentiment is going to be on Friday. So we got 3 straight days of spiciness. So we could get real choppy as people reposition. That's probably what we're dealing with now. So let's find ourselves a spot. Let's see if we can find something that is very entertaining. Something that we probably could hold going into the opening. But if not, it's okay too, because we don't have to force a trade. Something is... I turned that on. That was by accident. Okay. All right. Oh, I'm not even logged into my broker. All right. Now I'm really ready. Okay, so let's see. So right now we're kind of in no man's land on this 15 minutes. So I don't think we could get a good scalp. It's mostly bearish because of this area. Come back to the 45 minutes. Let's see. Yeah, still bearish. I'm thinking downside. I do think downside, especially how we came back and filled this imbalance here. They're trying their best to kind of give ourselves a bullish divergence. If you don't know how to read a bullish divergence, we're making lower lows like this, while the oscillators down here is making higher lows. They're trying to curl it back up. That histogram is saying otherwise, and that stochastic is different. So it's going to be very interesting on how the market react, aka very choppy. So just be smart with your entries. Don't do nothing reckless. But right now I'm probably going to look for a bearish position to kind of warm up with a paper trade. Let me log into here. Boom, boom, boom. And we'll get our warm up in. We got 12 minutes until the market opens, and then all the fireworks starts to go off. Yeah, kind of no man's land. Don't like that. Getting a little bit of a curl here. Good morning.
Good morning, but you mean 10 minutes because it's 9:18.
If you want me to round down, but no.
Because doesn't the market open at
9:30? Correct.
So it'll be basically 10 minutes.
All right. What time's your next class?
I'm not starting it anytime soon. Basically 10:30.
All right. You can hang out here, but you gotta be silent. All right. So now, what I'm looking for here, because now we're kind of building a base here. I think we're gonna get a nice little push up. I would love to try to reject off this level. I think that'll be the better price, and then try to see if we can turn this into what we used to do a lot during the pandemic. But this bull run, man, it was a lot of failure swings this time. Well, we kind of do this almost like an H pattern right here. So we'll go ahead here to here, curl that. So something like that. If we can get this H pattern to pan out, we probably could play this to the downside. And the measurement for that is a nice little break of this area, continue from this pole and extend down. We'll see if that goes. Yeah, because at 1 minute it was tied. Look at that. That thing can curl up on me. I am not trying to be there, especially in the middle of no man's land. That's the key thing around trading, folks. And I know I had broke this down for y'all and everything, but one thing I actually coined recently, and I kind of want to follow this rule, because most of my successful trades happen because of how far back I charted and how much I analyzed the chart. So right here you will see I have a rule of profitability, right? And the law of profitability is very simple. For every minute of trading, there should be at least 2 minutes minimum of equivalent of the charting, the plan, and points of execution. What that means is if you're going to do a 15-minute chart, now mind you, I've been charting NQ since we started this, this program right now. So if I've already covered probably about 15 to 30 minutes of charting minimum on NQ itself. So I already have an idea of what it can do. So that's based on what I've already seen. So now if we go over to the chart, this 15-minute chart is telling us what is starting to look like. We're getting into imbalances. We could go ahead and check out pivots prior to this level. But I already know that this strength is going to be regulated by how it reacts to this level. If this thing can give me like a lower high somewhere around here and reject, I'll go ahead and test this level. Hopefully I can get enough cushion from that I can hold on to the trade longer than I want. And if it keeps on printing money, I'll keep it. If it doesn't, then I'll get off of it. I would love for it to go back and test the 800 EMA. It's been a minute since we tested that. That was over here on the 12th, and we had a lot of candles that happened from there. Give you a sense of what I mean. Here's the last time we touched it, over there. And we're at 428 bars, kind of like at the halfway mark. So I would love to see how the market reacts as we try to get to that 800 EMA. So I'm a little bearish, just a little bearish, even though we're in no man's land. All right, we got like 8 minutes till the market opens. If I don't find, what just happened? Just booted me out of my brokerage. Okay, there we go. We're back. If I don't find anything by 9:25, I don't even want to paper trade it. Like, it's because by then you don't have enough time to build a cushion, and I like to carry a cushion for me to risk for the open. I don't like to just be in a trade and just hold on to it just because it's not 9:30. If you don't get it right, you could be really, really screwed. Yeah, this 200 level. Now this was one that was really, really tough. Let me put this on here because I saw this all of yesterday. I'm gonna get rid of my oscillators for right now and put this right flag on 2,200 on a dot. Watch the reaction of this level overall, right? So we had a bounce here around 630. We have a retest here as they trying to be bearish. We have a rejection here, rejection here, rejection here. This was a buy up because they didn't want it to give up that rejection. It was used as support for a very long period of time between the 17th and 9:30, and then right back at the next evening, which is the next market cycle. It was previous resistance, which turned into support. And I think that's about it, unless I go all the way to like December or something like that. Let's see. January. Yeah, right around here. And you can see they try to get that 200, use it as a bounce, use that and I apologize. Y'all probably like, wait, why you just said one thing to another? Well, I see these levels more like this because it doesn't mean it has to touch it. It just got to get close enough, and if people want to buy it up, they can buy it up. And this was major buys around 22.10, 22.13, you know, stuff like that. So don't just look at it. It has to hit that level directly. That the market's going to do what it wants to do. You just got to find where the reversal start. So be elastic. This thing is turning bearish, but I just didn't like what this was doing, so it was very risky to try to play it there. And now it's 9:25. Close the door for me. All right, 5 more minutes till the market opens. Patience, folks. Patience.
It's 9:25.
My door, please.
Coming back.
All right, let's check out my red list while we wait, because I don't think we're gonna find anything that's worth anything. This one is a very interesting company. It is rejected a little bit, but it's a very interesting company. They're the ones that makes autonomous robots for surgery, but it's monitored by doctors from remotely, if my memory serves me correctly. Very interesting company, especially as we go into AI, and you could kind of see the infuse of people starting to really start to use multiple layers of autonomous artificial intelligence. So this one's a good ticker. I've been just watching it to kind of see what it does. If we go over to the monthly, this is something that's just going crazy right now, and I think they're gonna go ahead and retest this level and try to push back up. I would say the key point was probably like December 2021. That could have been a good place for you to kind of look for a nice break here and then play to the upside. But this was a pandemic darling too, because everybody was running to computers and AIs and all that stuff. So just keep that in mind too. So I do think it's toppy, but nice little scale in for a good company. Starbucks, this thing is doing a lot of the things I thought it was going to do. I didn't think it would continue, but this thing is looking like a W with an inverse head and shoulder. I'm gonna bring it down to a daily to kind of see it. All right, inverse head and shoulder, and if it's gonna give me that inverse head and shoulder, it will be somewhere around the 121 area. But again, this is an inverse head and shoulder in the top of an uptrend. It does not guarantee that. It's probably the most weakest one out of all. And the same thing with this W. W's usually happen on reversals at the bottom. What?
Can you draw this?
Can you draw it?
Yeah.
Oh, give me a second. Let me finish. All right. When you see W's in inverse head and shoulders, you want to see them on the bottom of a trend, because those are reversal patterns. But in the case of this bull run, a lot of W's played out. A lot of them. All right. We got ourselves about 3 minutes. Let's go back over to NQ. Let's see if it did anything, because I'm pretty sure it probably stayed sideways. Let's come back to the 15-minute. Let's look at that trend. Did it make any lower lows? Nope. AKA choppy. And that's why I stayed away from it. 1 minute and 39 seconds, then we'll probably find what our levels are. Again, if you haven't been on my floor, we play 2 different types of trades. Opening range breakout is going to be the first one that we're going to set up. If it does give us a market dominance signal, which I don't think we're going to get one. Yeah, because this candle was weak, and this candle looks like it, unless something crazy happens at the open, we're probably not going to trigger a 45-minute engulfing.
Also, it's so hard. It's illusion. Look, right here, the wall looks like an illusion. It's in the car.
It's not an illusion. I drew it in 3D. So, kind of give y'all a little preface, as my son is trying to break down some of my. I tend to talk too much sometimes, so I draw a lot. So I drew what traders tend to do. This is an anti-growth mindset. You're driving your Tesla Model Y, and you're just acting like a donkey. You see a brick wall that's your support or resistance that's coming in. And you're like, why is that there? They hating on me. Oh no, they're not gonna stop me. And then you just drive your car. Listen, this is your portfolio. This is your car. Protect it. Hit the brakes. Cut your losses. Double back. It is what it is. Don't fall into the anti-growth mindset. You want to be a sound, disciplined, structural following trader. All right, market should be opening soon. Let's go ahead and get to it.
It's opening in one more minute.
Enough of the interruptions. I gotta focus. Here you go. You can look at that. But shh. All right. So far, it looks like we're still getting bearish. They are rejecting yesterday's opening range breakout, which I'm going to delete in a little bit. I just want to kind of see how they react to it. Especially, we're trying to fight for new highs. So I'm just trying to get a gauge of what we can and cannot do. Just being patient.
You draw very good.
I don't. I do. But I appreciate that. Thank you. All right. So far, if this 15-minute candle was to end right now, we would just flat out, and I do use Fibonacci's for mines. I got a nice little setting that I'm comfortable with, but we would be bearish below that level. Let me fix that. We'll be bearish below that level, and we'll be bullish above there. Actually, you know what? I think I'm going to put this back into the middle because it can be a little distracting to see the price. Let's fix that. Values right. Let's put it in the center. So we will be bullish here, and we'll be bearish down there. That is not my level. Why did you go all the way down there? Oh, that's interesting. What just happened? Oh, my bad. There we go. So bearish below this level and bullish above there. So we just need a 5-minute candle to close above or below it respectively, and then we'll play it to the downside. The more we kind of push here, I don't think we're going to get a trigger on market dominance to the downside or the upside. But if we start to really fill this here and come down to this level, we might trigger a bullish to the upside in a little bit. So we'll see how this goes. Let's come back over to the 15-minute. Patience, folks. On my door, please close it. All right. Actually, I'm gonna get rid of this one now. I don't really care for that right now. Oh, and also let me save my template. Number 3. There we go. Now the fun thing about this is because the 200 level, I know they are really eyeballing this, and we've been zigzagging across it over and over again. That's part of this zigzag, and then now we're back to zigzag right back down again. So it's these levels of resistance and supports that's trying to hold below this 200. I don't think they really care about the 100 as much, but the 100 did get a strong reaction to the upside. But if this 200 fails to really hold, I won't be surprised we blast right past 200, maybe get down to the 20,000, which lets me finally test my 800 EMA, and we could go ahead and take a bounce from that level. All right, don't forget, links are down below, my link tree. My 101s are still open, so if you want to go ahead and get a 101, just go to my link tree and book your 101.
The meeting is not open because it ends at 9:45.
All right, here we go. What my son is so eloquently wanting to interrupt. Yes, I do have a hard stop at 9:45. Probably gonna have to adhere to it because I got a couple of things to do for clients. So yeah, we might just be doing the opening range levels locked in, and then if I see something that's like, hey, this looks really, really good, I'll let you know. But we're basically fighting between two order blocks. Here's an order block right here. Actually, let me box it out so you can see it. So we got an order block that's here. And then we're sitting on top of this order block here. Technically, really this one here, but I'm gonna call this area from here to here an order block because of how it reacted. I think this was a manipulation swing. They took out a lot of sellers, took out some of the imbalance. We didn't get the rest. So this kind of gives me some question marks on, does the bulls have enough to take out these sellers that's up here? Maybe. And you could kind of see we're putting in this hammer. Like a good friend of mine says, don't diddle in the middle. And these ranges, as we establish it, especially in the first 15 minutes, kind of let you know that you're playing in the middle of a very, very volatile, choppy market. There we go. We get a nice little push here. All right, let's readjust this. Let's see how that reacts.
I think the tricky part is hitting the wall.
So what's very interesting with this is because we're putting in a bullish divergence here because we're making higher lows on this pivot, and this 15 minutes is going to finish as such. And this could be the base that they were building using this order block here, which I said I didn't want to use this order block, even though it's valid. I do believe so, which would look something like this or maybe a little higher, like this. That could be the case, but it's such a recent order block that I'm like, maybe not. And it's so close to tightening to that 200, it could set you up for failure if it hits a brick wall there. So that's why I didn't really highlight that one, but we'll see how this goes. Just patience, folks, just patience. All right, we got to the 200 on the 5-minute or the 15-minute. Actually, just slightly below it. Yeah, we didn't get all the way to it, so we could probably touch the 200 and then reject. We got a nice little imbalance on the 15-minute from here to here. I think this is what the bears are holding on to for right now as far as recent trend. And that'll be our bearish fair value gap, like that. I think we finally touched the 200. Yeah, finally touched it. Ooh, almost. There we go. Now it touched the 200. So what does it do with the 200 EMA? Does it break it down? Does it push up? What is the game plan for the 200?
I didn't do that. It looks good.
Fair enough.
I couldn't find a black marker. This looked like black. I just
you do realize I drew that by doing it in pencil and then outlining after. I don't just draw it on the marker.
I know. I could tell because I could see like right here on the door. There's like little pencil marks.
Actually, let's do something fun. I see someone's in here. Hey, good morning, my neighbors. How y'all doing? Let's go ahead and look in the video and look at, oh, nice little market dominance here. Letting us know it's going to be green. Got to open it. I did it backwards. Of course I did it backwards. It'll be too easy to do it the right way. All right. Got an opening range breakout here for NVIDIA. If you don't know who NVIDIA is, this is one of the stronger companies in the semiconductor space because they are the world leader. A lot of the stuff that's in your computer is probably from NVIDIA or some of their chips itself. So it looks like we got 5 minutes, so we got a range here. Oh, but this thing is sitting right on top of a 50 EMA too. Hold on. I'm gonna have to check what. You'll need a. I thought I. Whoa, hold on. Something tricky is happening here. I know I have real time. Hold on. Let me make sure my NQ. So my NQ is real time. So something's wrong with my subscription on my retime day. I got 5 minutes. Let me go ahead and get that resolved now. Yeah, main group. Why do I only have New York and I only got the minis? Oh yeah, something's wrong.